Hello and welcome to the Sand to Pearls Market Commentary for the market week ending Friday, February 8th, 2013. And happy Chinese New Year. Happy Year of the Snake. Hopefully you'll be as wise as a snake this year and have a good investing year. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell slightly from 2.72 to 2.64, still in strongly bullish territory. The total count of securities in bullish or bearish patterns decreased 2% to 2,364. The count of bearish stocks increased 1%, while the count of stocks in bullish patterns decreased 3%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 7 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the image is generated. You may become a paid subscriber by going to S2PMarketSignal.com, clicking on the Membership tab. There is available a 2-week free trial subscription. Those who have studied the markets are aware that 3 out of 4 instruments follow market direction. So a signal that lets you know what the trend is in a clear manner has potential to be very valuable. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 20 points for the 11th rise in 20 weeks. At a positive 518.18 points, it has broken above the November 2010 top, the January 2011 top, and the November 2011 top, and remains above the September 2012 top, November 2011 top, July 2012 top, June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom, but below the February 2012 top. Volume analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 2 accumulation days and 2 distribution days. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended the week in neither accumulation nor distribution mode. Momentum. The CI 20 daily began a Woody's uptrend 10 weeks ago. It continues above the plus 100, well outside the plus or minus 50 range for a valid zero-line reject signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index begins a Woody's uptrend this week, while the daily CCI 20 began a Woody's uptrend 10 weeks ago. The CCI 20 weekly now has 6 weeks above zero to begin a Woody's uptrend. At the 120.55, it is outside the plus or minus 50 range for a valid zero-line reject signal. So once again, that sort of trade will not be in the question for a little while. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 industries are negative. Bullish, brokers continues to lead the top 5. Semis has entered the top 5. Oil and oil services have left the top 5. Bearish, networkers remains in the bottom 5. Disk drives and computer hardware have entered the bottom 5. Gold and silver has left the bottom 5 and has entered the top 5. Focus this week. It is when the market is at all-time highs that wise investors begin to plan for a sharp decline. Such is now the case. According to this article, Traders Start Playing Defensive by Stephen M. Sears. This market commentary is respectfully submitted by Donald L. Pearl, Jr., who hopes that you have a great week this week, a wonderful year of the snake, and wishes you happy trading.